All right, let's take a look at these deep liquidity grab levels. So I want to go over this again to make sure that we're on the same page. Everybody, good morning. Good morning. Hey, George. Hey, Russ. Good morning. So let's get rolling this morning. So these deeper liquidity grab zones, they give us a big heads up. It could be a 1 hour, 2 hour, 3 hour, 4 hour, 5 hour, 6 hour, etc. heads up on when there's possible reversals in the market. So this is our standard Renko chart. This is our 1-135. What we have in the room is we have our proprietary Sim Renko zones. We have our 100 and our 200 zones. Now, the 200 is the deepest zone that we have, and the intermediate would be the 100, and the standard is our 25 zone. So how you trade these zones is that they are very, very leading. They let you know exactly where a possible deep liquidity grab is going to occur. So let's go look at yesterday, and we'll go into the entire session. Let's look at the entire session just so we get a feel for how to look at these long and short. So let's look at the entire session. Yesterday, we had a zone that projected at midnight at between 71 and a quarter to 75 and a quarter. So here was our buy zone. It can be red or green, doesn't matter. It's telling you where the liquidity grab could occur. So that was the zone. So the zone occurred around 9 hours later, 9.5 hours later at 9:37 in the morning. So this is a 9:37 trade, or time of day trade that we talk about, that where price gets inside of the zone. It gets inside of the zone. It does not close by one candle outside of the zone, and then we get a reversal candle, and there's your entry at 80 3/4, and the push got as high as 0.5. So went up 20 S&P points. That's a 20 S&P point potential run on that move. Now what happened is that we came down after hours, broke liquidity grab zone, retested liquidity grab zone, which this can do. Remember, you can come down and test the zone like this, get inside of it, get a reversal candle, and that's a buy signal. Or you can break through it, retest it, and we had a reversal candle here at 72, got as low as 58. So it fell 12 S&P point potential. Then you get a break retest. So either way you do it, you can have they are the same exact setup. You're trying to get inside of the zone. They're trying to trap traders that are short. So what they do is they trap all these traders that are short, and they move it all the way back up. They grab liquidity from these counter trend traders, or these traders that are short, and then they bring it right back down for a nice push. To blow it up to see what I'm talking about, a liquidity grab is simply this, and these zones help us determine where they're going to be. But what happens is that you get these traders or these algos where this low is broke. This low is broke. This is where they're going to snag liquidity because they just broke this low. And this is where they're going to grab all the liquidity at, right there. That's where they're grabbing liquidity to bring it higher. So this is a nice, and we have a specific zone where the reversal will happen. So this reversal, that's our specific liquidity grab zone. But once they break this low, That's where they're grabbing liquidity. That's where the smart money's grabbing liquidity to bring it higher. They're trapping traders. Same thing yesterday before that big run up at 211. It tried to do it here, but broke up by one candle, so you can't take that trade. But then it broke out, it retested, tested the exact low of the zone, liquidity grab zone, and gave a reversal. And that was 63, as high as 89. Nice push into the big move up when they're grabbing that type of liquidity again. Once again, it can be a break retest or it can be just a natural liquidity grab. That's what they're doing. So what they're trying to do, they're trying to trap these traders from here to there. Trying to trap those traders. Get some buy order blocks there and then bring it up. Then they're trying to trap these traders when the market is just in a big push down. They'll trap them. They'll do a break retest. They'll bring it straight back up into liquidity grab zone. They'll get a reversal candle. So they just trapped them because they're covering all their positions, bringing it back up, and then they bring it straight back down. So this is a really nice way how to trade because you don't get a lot of trades during the day off these larger zones. Because our standard zone, this is a 100 and 200 Simrinko proprietary zone that we have in the room. Now our standard zone is a big short yesterday we had. This is a standard zone. It's a 25 zone. You get more trades like this, but your trend zone is down. This is called a confluence trade. Actually, it broke higher than my zone, but this is a 25 zone trade. I'm sorry. It came back into my sell zone. It cannot close outside of my sell zone. This is the line in the sand. There's your reversal candle that happened yesterday at 71 3/4. And it got as low as 69, almost 12 S&P points to the downside. Now, consequently, you'll have what's called confluence of of these zones. So this happens all the time on a week-to-week basis. This is a neat little trade. So we have our Simrinko algo 25, 100, and 200. Reversal zones. All right, so those are three zones we use. So with those three zones, what happens if you get a 25 that conflues with 100 or the 25 conflues with 200? We've had it 3 times this week. It's happened this time for solid moves to the upside and downside. So when you get those that conflue, it's the same exact point in time. It's the same reversal. So if you look at this, is at 1621. Right there's a 1621 reversal into the 25 zone. Well, consequently, at 1621, look what it did on the 100 zone. Look at it, 1621, exactly the same reversal. The exact same candle reversed at the 100 zone. That's called confluence. So we had the 100 zone reverse, exactly reverse price, exactly at the same time that the 25 zone reversed. So these two conflude. And when you get confluence, you should see price react immediately in that direction after you get a reversal. Hey, Steve, good morning. Hey, Aaron, good morning. So if you can see, that is confluence. You're confluing between the 25 at the same exact reversal candle. Remember, I had this as a 135.35 also. This is a 135 going 24/7 with a 100 and 200 liquidity grab zone on, and this is a 1135 with a 25 zone. So this reversal candle exactly happened exact same time as this one did in the 25 zone. And that gives you confluence. And these are strong levels of reversal. This is a 25 reversal liquidity grab zone. Looking for reversal. And then this one. It's a dashed. My plus sign is my 200. So the 100, 100. Zone was right exactly at the same exact time. And that's why we get a nice push. So that's how we can glue these two charts together. I leave this in the upper left-hand corner for you traders that view the system. You can see today's levels. Today's level is a deep liquidity grab. So what you want to see, this inside this zone and get a reversal candle for a long. Or if it goes deeper, if it jets right through it and closes one candle below it, you can't trade it. Look for this, right? Or since it's a liquidity grab zone, a predefined liquidity grab zone, you can look for a break. Come inside the zone. Do not break the zone. Retest. There also, so we know exactly what we're looking for on these levels. They're already predefined. They don't repaint. These are solid levels for us to trade today. So we'll look at those levels. Possible reversal between 78.5 and 82. Possible reversal between 53 and 57. So we already know way ahead of time what we're looking for. These only come up once, twice during the session. Sometimes 3 times if it's active. Between 9:30 and 4 o'clock. The 25 reversal zone comes up more because it's a smaller zone. So like right now, we're into this is a reversal zone on the 25 zone. Now you don't have a yellow trigger because it never reversed inside of my trend zone, so it's not confluence there. That's why you never got a yellow trigger candle. Now, if you want to be really, really accurate, what you can do is you could watch for these 100 and 200 zones to come up and get a yellow candle reversal on this chart over here at the same time. Those are very powerful trades. We've seen them. We've seen 20, 30, 40-point moves. We had a 55, 60-point move on the S&P last week with that. So that's when you really see it move, when you get a yellow trigger entry candle on this chart that conflues inside of these two zones. So we'll watch for that zones.